Yeah. I can multi-stream, so on there's another program. Oh, everybody, welcome to the show really quick. We're going to a little quick divergent. But there's a software program that's on, you can go online. It's called iCaster.
Okay.
And so iCaster, with this software, it's pretty cool because I can stream to YouTube directly, to Facebook directly. But with iCaster, I can send this feed to iCaster, and I can go to LinkedIn Live, YouTube, Twitch, everybody 10 at one time.
That's cool.
So you can really get your message out pretty easily. But
That's cool.
Welcome back, dude.
Thanks, man. Thanks for having me.
Thanks for showing back up again. And for everybody that really didn't get to listen to or see the last one, we didn't video record the last one, but I've made myself a goal to video record every podcast from now moving forward if we could possibly help it. So Dylan is the founder of the James Warren Group, and we did episode 50. If you go to our podcast, you can go there on Spotify, Apple Podcasts, 10 other podcast platforms and find it, the San Antonio Realty Pros podcast. And episode 50, we brought Dylan in, and we really just kind of broke down the foundational information about credit and how important it is. And we really just kind of baby stepped it hey, this is what a credit score means. So let's take a few seconds just to kind of go back over some of that and just kind of recap really quick for the people that might have missed it. But guys, if you're listening or you're watching, go back and do yourself a favor. Listen to that episode. It's crazy. I didn't know that there was multiple FICO scores.
Yep, right. 28 of them.
I felt really smart the other day when I was telling one of my clients. I was like, did you guys know that there's multiple FICO scores?
Uh-huh.
And so, so it was really cool. I think you guys will do yourself a big favor if you listen to it. Let's go back over what a FICO score is. Dylan, again, thank you for coming, man. I really appreciate it.
Absolutely. So the most simple version is your credit score, especially on the FICO model, is going to be, and again, there's 28 of them, but they are all determined based on your behaviors and how you manage debt.
Yeah.
So payment history is the number one influence. Utilization is number two. Those are the balances you're keeping over the credit cards. Inquiries actually are the lowest at a 10% influence. Credit diversity has a huge part to play in it. And overall, on that payment history and utilization side, I always tell people to focus on that because payment history and utilization combined control 65% influence. They're the majority. They rule the majority.
Right.
So once you understand those mechanics, those basics, the 5 factors of what influences the scores, then you can look back at your behaviors so you can change what you're looking at. It's almost like when you go to the gym, when you can lay out what you're actually eating and you start counting macros and you're looking at everything and you get more surgical with it, you understand how you can make that physical transformation you're looking for.
You're 100% right.
So if you apply those same things to your credit score, you can significantly make a change in a positive way.
Yeah.
And then start leveraging credit to your benefit.
So David says this all the time. Tell him, if you plan to what?
If you fail to plan, you plan to fail.
Exactly. So you got to have a roadmap.
That's right.
And setting goals and stuff like that. Just like we said with the working out thing. That was a beautiful way to make people understand. You ain't going to get any better than you are if you don't have if you don't go to the gym with a plan. It's not going to work.
Exactly.
That's life in general. If you have no roadmap of where you're going to go, you're just going to wander aimlessly. You end up in Schitt's Creek or something like that.
Yeah, I don't want to be in Schitt's Creek.
And that's why we got GPS. I GPS everything.
Yeah, I have no idea how to get to most places.
Yeah.
And I've been here for 7 years. I still don't know how to get to name a random business. I'm like,
Walmart.
I think I can get there by 35, but I don't know. Yeah, right. Well, I can find that on every corner just about.
Yeah.
So the basics are super important, and the main thing is to have a friggin' plan on what you need to do. So if you've got a client that's, say, they come to you guys and they're like, hey, look, I just know that I'm trying to buy a house.
Yeah.
And I need to get a mortgage. And in order to get a mortgage approval, I need to have an X credit score.
Yep.
A lot of people, they'll go to the different lenders, and every lender has their own overlays on the credit requirements. And so some lenders might have a minimum of 650, and they won't talk to anybody unless they're above 650. So somebody comes to you and says, hey, look, I refer them to you guys, and you guys are working on their credit. What are some of the main things that they need to bring you guys, that's going to help them get to where they need to go?
Yeah. So in order to be able to get there, you need to make sure that you have, and this is kind of not the, what's the word I'm looking for? This isn't the technical term, but what you need to bring is actual commitment.
Yeah.
If you could just bring me commitment, I can handle the rest.
Yeah.
Right. So like, for example, we're going to pull your credit report together, right? We're going to look at it. We're going to break it down. So you don't need to bring me anything like that.
Right.
If you can, as a client, bring me just your commitment to say, I actually want to make the change, right? Again, going to the gym analogy, you can say you want to change, but if all you did was sign up for the membership and you're not, getting your points for tagging in, then you don't really want the change. You just paid for the membership, right?
It's a good idea, but I ain't following through with it.
Right, exactly. So you just need to be committed. And if you could bring me that absolute 100% commitment as a client, then we can handle the rest. Yeah. We literally try to make it as easy as possible. So you come to me and say, hey, I know I want to get a house and, this is my time frame. Here's my situation. Tell us all of it. We need to know all the details. It's almost like consulting with a lawyer, right? I need to know everything. You tell me everything, then I know the best way on how to help you. Right. So bring me that commitment. Tell me what the background story is. Let me know what the time frame is and what we're working with. Once I look at the credit report, everything else, as far as those negative items, are all on us. To clean up the negatives is us. Everything else would then be on client, which is if you have any active credit cards, make sure that we come up with a plan and how you're going to be paying those things down and get the balances down. If you have a thinner profile, meaning you're not really managing and using much credit at all, we need to get you using more credit to build your references to get you approved that loan. So I know how to help people improve their credit by lender guidelines, which is huge, because I understand all the different types of loans and things that are like minimum requirements that are needed to get approved. So I got all that covered, which makes it very easy to just say, literally bring me your commitment and I'll handle the rest.
Yeah. So the last episode that we aired, we got a lot of good responses from it. Talked to a couple of people in between now and then. And I guess the biggest question was what do we do when we've hired a company or we've talked to somebody and it just say they went on the internet, like we said earlier, they went on the internet and they started going down the road of finding a company to start working with, right? And then they start reading everybody reads Google reviews these days. I'm going to judge who I do business with by Google reviews. And that happens in real estate as well. David's got, a bunch of clients that have worked with him because he's got really good reviews. So everybody knows that they need to step their game up on the review side. But if you've got a company out there that's got a lot of bad reviews, I mean, what should they be looking for, from a review aspect to see okay, that's a good choice, because there's a lot of companies out there that are just handbagging these clients and they're just collecting checks, right? So it brings a bad name to the environment, right? And so the same thing with real estate and car sales. It's you get that used car salesman type mentality. You've been in the car business before. We talked about that in the last episode. I was in the car business when I got out of the Marine Corps, and there's a stigma behind it.
Absolutely.
And I never want to be associated with the greasy car salesman. And I'm not, but there are a lot of people that just give off that weird vibe.
Absolutely.
Company-wise, some of the schemy stuff that they do. And so how do you guys combat that with clients? What should they be looking for in a company?
So some red flags, right?
Yeah, for sure.
So the biggest red flag of any of them, and we're going to go through a couple, but the biggest red flag from any company is, one, when you check the reviews. Right? And just because you see a 5-star, that's not good enough. You need to click the 5-star and see, is there anybody that is writing about them, or is there just a bunch of blank 5-star reviews?
Right. Is it great service?
Right, exactly.
I know you paid for that.
Right. And it's
doing it themselves.
And it's the reviewer's picture is the person's mom and them. You'll be able to tell if it's legit reviews. So one, use your best judgment and look at the reviews. And reviews are a great source, but now there's even so many things that are out there today. I'm not going to say it, but there's one specific company that I know for a fact.
And it rhymes with.
I know for a fact that they have filtered their reviews. Like there's companies out there that will say if it's anything less than a 5-star, it won't post.
Oh, wow.
Yeah, the shit's nuts.
That's sketchy. Then.
And the reason that I know that exists was because I've gotten clients that have screenshot me their reviews.
Oh, boy.
Right?
Yeah.
And it's not what shows on there.
Uh-huh.
Right? So
that's funny.
Then it got me to Google and stuff like that. And I was like, what the fuck is this? How are they doing this?
So there's a way that you can right click on your screen on your web page.
Okay.
And it's called, and you click inspect.
Okay.
And it comes to the coding on the screen, like what's written in code. You can change the code to say whatever you want.
What?
Yeah. You can go into like your bank account home screen, and like you can change what the bank balance says by just altering some code words. Yeah. It's crazy.
Is this how these fake gurus do that shit?
This is how they do the Amazon affiliate people. And they're like, I made $1 million last month. It's probably all fake. I'm not saying it is, but it's probably all fake.
I think we had a tenant do that.
Yeah. There was a situation. Yeah. That he paid the bill and it showed his bank account, like sending out a payment through his account.
Yeah.
And our system never caught the payment.
Nope. And I went to the software company that we use.
Yeah.
And I was like, hey, he's showing me this. He has provided me this. Here is what he's providing me.
Yeah.
They sent it to their forensic accounting department, and they looked at it, and they're like, we have no metadata for any of this. And the font, it's close, but when they examined the font, it was just off.
Yeah,
that's crazy.
And then miraculously, because I kept telling him, I knew what was going on. I kept telling him, I'm like, hey, just come on in.
It doesn't seem right.
Just talk to me, right? Let's work some stuff out.
Yeah.
Bring me the bank statement from the bank. Like, give me something from the bank, not a screenshot. Give me something from the bank.
Yeah.
And like, oh no, I'm just gonna go pay. I'm like, don't pay. I don't want you to pay it. You've already paid. I don't want you to lose money and all this other stuff. It was like a whole drawn out thing. And then they ended up just paying the money because miraculously they went back into the bank to go get it. Because every time I talk to them, every 2 to 3 days, I should be getting a letter.
Yeah.
And I wasn't getting a letter. Miraculously, all of a sudden, that charge just disappeared.
Yeah.
Wow.
Awesome.
Stop scamming.
Yeah. It's terrible.
Like, I can work with anybody.
Yeah.
And I have worked with pretty much anybody. But you lie to me, you try and cheat, you try and think I'm an idiot.
Yeah.
I'm gonna make you feel like
an
idiot.
Yep.
100%.
Yeah.
Wow.
I remember that. Because, this year, what's time? Lease renewing? Cool. Hey, guess what? We're going to renew your lease. Rent just went up $500 a month.
Right.
Yeah, exactly.
Yeah, we just
clearly you can afford it because I can see all those things you're apparently putting it in. So
just keep adding zeros to your account.
Wow.
Yeah, we're actually altering our lease document for those purposes just to
change
crazy. The way that it's written.
Yep.
God damn.
Yeah, so you got to watch these people.
Yeah. So, all right. So I just learned some new shit. But like,
the real Slim Shady, please stay right.
But like on that, like credit repair companies do that too.
Yeah.
Right. And this is the problem. So the major red flag is like, look at the reviews, right? But understand that they could potentially be altered. The second part is ask people if they've used them or heard of them.
Yeah.
That's another thing, right? Because again, now we just learned you could literally fake how much money is coming in. So it's easy to forge reviews, right?
That and get on Facebook.
Right.
And they can ask around. Somebody's bound to have worked with them before.
Exactly. So ask around, look around, see what other people have to say. Then the next thing is you want to ask them a couple questions. Like, for example, I mentioned earlier, like, hey, we repair credit by lender guidelines. If you're a potential consumer that is about to hire a credit repair company or thinking about it, ask them, do you repair credit by lender guidelines? And if they say yes, don't let them get off the hook. Ask them what that means.
Yeah. Can you send those to me or
exactly
explain what those are?
Right.
Yeah.
So, that's another thing you want to look for. 2, anytime that you have somebody that, or a company, because sometimes it's an individual or a company, and they're just saying things like they guarantee they can delete something. That's a red flag.
Wow.
Right? And let me explain why. Because now using my lawyer analogy, this is actually my favorite one. A lawyer can never guarantee what's going to happen. You can get the best lawyer known to existence. And if that judge or that jury or whoever has had a rough day and they just aren't jiving with that, with that lawyer and it's not good enough, you can still lose.
Yeah,
right?
Absolutely.
There's no lawyer that is 100% won every single thing in all of their years of doing it.
Not even Thomas J. Henry?
Right. Dude, that guy's a savage.
So, you know, there's a lot of people who are very good at what they do, but none of us can ever claim for 100% certainty that we can delete a certain account or all of the negative items because we aren't the decision makers.
Right.
We're gathering all the paperwork. We're listening to what you told us. We're looking for the erroneous, inaccurate, and inconsistent things on the credit report. We're leveraging like the FCRA, Fair Credit Reporting Act, and CFPB, and all the other things that are applicable to us, and saying, based on these laws, rules, and regulations, here's clear violations that we saw that either that creditor or the bureau was in, and we need you to fix this. This is the result that we're entitled to, and this is what we're looking for.
Yeah.
It does not always mean that it happens. As crazy as that sounds.
It could be disputed on that end.
Exactly.
And they say, well, we can't.
Right. At the end of the day,
do
they could say,
anything
well, here's how we verified that information was correct. And then it's literally a battle back and forth. Yeah. So, which brings me into the next one. So if anybody ever says guarantee, they're bullshitting you, they're lying you. And technically, since we are regulated by the FTC, they can not only get shut down, but they could get fined for that. Nobody can guarantee a result.
Yeah.
Nobody can.
That's good
right?
to know.
The next part is when they try to say how fast it is.
Yeah.
Right.
These are buzzwords that just scream
Yes.
marketing lies.
Yes.
This
Right.
is guarantees, you know.
Right.
You know.
And they use them all the time.
Yeah.
And so then what happens is when you don't know what you don't know and you're assuming that they're marketing themselves as the professional and they're showing you all of these results that they're apparently getting, which here's another one. If they're showing you all the results and improvements they're getting and they're sending you screenshots of Credit Karma, that just tells you right there, like, what the fuck?
Yeah, we talked about this the last episode, like Credit Karma.
Yeah.
Like, wow.
Yeah.
Now I deleted it, so I don't even use it anymore.
Nice. So, and it ain't Credit Karma's fault necessarily. It's more these credit repair companies that are out here saying, look at these results, look at these results, look at all this shit that's deleted. Let me tell you how many Facebook groups that exist for people in our industry that are posting results like, hey, I use this method, look at these results for clients. And people just go in there and screenshot it and crop it and then post on their shit, look at these results we get for clients. Hey. Right? So like it's all fucked up.
Terrible.
But like, so anyway, red flags are if they're saying words like guarantee or if they're saying that it's going to happen very quick, right? Because it's not. There are exceptions to the rule where sometimes in the first round or second round, you can get good results. It does happen, but that is the anomaly or it's not
That's
the
exception to the rule.
Yeah, it's the exception to the rule. It's not the standard, right? And a lot of people try to market that and promote that as the standard. So if you are searching for a company and they're using words like guaranteed, fast results, you know, pay now, and, you know, we could do this in as little as this time, and it seems like less than 30 days or so. Yeah. Those are all of your red flags to stay away. Those are all the people that are making us look bad.
So if it sounds like a weight loss pill program,
or an MLM, or an MLM.
Thing, right?
Yeah,
It's
exactly.
like a multi-level marketing.
Right.
Exactly.
Yeah. So, by the way, I had a little bit of an additional thing that I did. I actually went and paid for the Experian thing. It's like $35 a month.
Yep.
And that gives you like
all three bureaus and you
tons of information. So I really enjoyed doing that, and I appreciate you giving me that piece of information.
Absolutely.
Because what you were telling me was, you know, people that are coming into the credit space and they don't understand the differences of what these companies do, they're selling you credit cards.
Right.
You know, this free creditreport.coms and all that.
Credit Karma's notorious.
They're using your data to like fish, you know, all these credit card offers to you in hopes that they'll get a paycheck. And which, hey, you know what? It's a capitalistic society. We got to whatever. Yeah. But so I changed it. And then I want you to kind of kick this into there and just kind of talk about it. Experian Boost.
Okay.
All right. What do you think about Experian Boost? Because I tried it. I didn't have enough. I don't have a credit issue. I have a lower score. It's in the low sevens, but the reason why it's in the low sevens is because I have a lot of utilization.
Right. So I'm sure if you manage those credit cards and got them down, you'd spike up into an 800.
Right. Yeah. And so I've got a long history. I just was looking at all the stuff. I've got a long history. I don't have any derogatory things on my report. It's just I've got heavy utilization.
Yep.
And so I tried the Boost, and obviously it didn't work for me.
Right.
It just reported like my phone.
Because your issue wasn't lack of payment history.
Right.
Right.
Yeah. Or derogatory like hits, late payments, stuff like that.
Right.
So what do you think about Experian Boost? And like, do you think that holds any weight? Does that actually translate to higher scores on the raw scoring, like the FICOs.
Right. So there's going to be a lot to this. Can it technically help?
Yeah.
And can it increase somebody's score? Yes. In specific to lending, though, right? So in specific to getting a car or getting a mortgage,
yeah,
most people with lower scores, I'm saying most, not all, but most people with lower scores typically have a money management issue.
right?
Right. And as you know, when it comes to getting approved for a mortgage, DTI is considered, right?
Absolutely,
And each loan, part of the loan requirements is they have a maximum percentage that they'll allow for people to be, at, whether it's like 50%, 55%, 46%, there's always, a little different.
Yeah.
Now, when you add Experian Boost, one, it's only helping with Experian. And with lending, they need your mid score, so they're pulling all three bureaus.
Right.
Right? So can it help? Kinda. But it's not really the full help that you need. I know it's free.
Yeah. Make you feel good.
Right. It'll make you feel good when you open that app.
Yeah.
It's like a hug.
The reality of...
It's a digital yes.
I see you. I recognize you. Good boy. Here's your
yeah. And all that it really does is it helps that one bureau. It doesn't help all three.
Right.
And I'm not saying just don't help one, because it's not doing all three, but it's not doing what you think it needs to do.
Yeah.
And going back to most people typically have those money managing issues. With that DTI, it's only going to now increase it. Sure. Because now you're reporting your monthly bills, right? And that's how DTI is calculated. What's your debt to income? How much do you make every month versus how much is going out every month?
That makes a lot of
right?
sense. Yeah.
So, it may help score-wise, 10, 20 points, 30 points maybe. Hey, let's say it gives you 50 points. Fuck it. But now it's going to hurt you in the DTI aspect.
Yeah.
So if you're kind of riding that threshold, which ideally you would be, because you want to be looking at Experian Boost if you weren't, right? Because you're trying to find ways to increase your score. It only helps one bureau. The points may go up, but when you're trying to qualify for a mortgage or even a car and they look at your DTI, it's now increased what your monthly expenses are because you just told them, here's all the other things I pay for every month. Right.
Yeah.
So
no, that makes perfect sense. That actually clears up quite a bit of a question that I had, because I was like, this seems like a benefit.
Yeah.
There's something
it's not horrible.
Yeah.
Like Experian Boost works best for the people with the thin profile.
Right.
The people who have not been managing a lot of debt.
A 20-year-old that's got like a cell phone payment and their car payment.
Right. Maybe
got one credit card.
And even if they're renting, and they're like, well, damn, all I got is those things and I need to report something else. It's okay to report their utilities. But again, when it comes to the home lending decision, as that, loan officer, I'm not saying I am, I'm saying when they work with a loan officer, I would hope that the loan officer is also looking at what their income is and verifying what their reported income is.
Right.
So then that way, before they make that type of recommendation, they're not actually hurting them by now increasing that DTI percentage.
Sure.
And because there's people that have great credit scores, but if the math doesn't make sense, you could still get denied for the home.
Yeah.
So I got a question for you, because when a lender is looking at their debt to income, they verify their taxes, they verify their pay stubs, everything, right down to calling their lender to verify that they are employed. What does it matter what's on their credit score if it says, hey, your AT&T bill is this and your utility bill is this? That shouldn't really impact their debt to income ratio, because the lenders don't look at that kind of stuff. They look at I guess they do look at what's on the credit
underwriting
report.
is going to look at it because it's on the credit report.
Right.
They won't look at it if it's not on there. So if you voluntarily put it on there, now you're exposing and creating the conversation of, well, walk me through this.
Yeah.
Right.
Yeah, because when I added mine, it did my my internet, my GVEC electrical payment, and my cell phone payment. Mm-hmm. That's $700-800 right there a month that it added to my outgoing bills. So
Plus 200 to Pornhub.
Right. Yeah. We won't talk about that one. Keep that in the backside. Anyways, yeah. So no, that's really good information. And I'm like trying to figure out okay, that's definitely a benefit. But let me ask you this. So if you're doing credit for somebody and they're trying to work around the whole, what's the best way for them to update their profile on their own, it always wants you to take off or addresses that are old addresses, old employers. Does that affect their score? Because I was watching something the other day. I think an email sent across Experian sends you like a million emails a week. I'm getting tired of that, by the way. So stop it. But it said update your past addresses and update your current employers. And what I looked on there, I had like 4 employers on there from way back. Addresses from way back. And I'm like, why is that still on there? Will that affect their score up or down?
It won't affect the score, but it will, again, affect the lending decision.
Okay.
Right? So, like, for example, credit is not also just used for lending, but let's say if you're trying to buy the house and you have 4 previous employers that you've had, and then they go to verify how long you've been at each of them, well, then it could potentially affect the lending decision when it's like, wait, you've had 4 jobs in the past 4 years. Right. So now
you've been there 11 months and 12 days.
Right. So how the hell are you telling me you've been here for 2 years?
Right.
When your credit report says different.
Yeah.
Now, the main reason that somebody would want to clean up their personal information is because sometimes negative items like collections or charge-offs and things like that have documented that incorrect address, that incorrect spelling of the name. Right. And what you can do is when you correct the personal information, you can say, this is the only way to spell my name. This is my registered social security number. This is my only current address. This is my one previous address. And when you have that documented and fixed, now you go to the collection agency or the charge off, whoever the company is, and say like, hey, this is incorrect. 80% of credit reports have inaccuracies, which is why credit repair is effective. Gotcha. But you have to fix that personal information so you have verifiable documentation to prove this is why I'm telling you that this isn't mine because this is how you spell my name and this is how you have it on record.
So if Steven wanted to go buy something and wrote down his name as PHEN instead of EVN.
Yeah, that counts.
Then he goes and gets his another mule and then he come back and he can not pay it and fight it. Like, that's not my name. I'm not giving any tips. Just
morally speaking, that's not what's
right. That's not ethical. That's illegal.
Right, but does it happen? People do that. Again, it's not supposed to happen. And can you get away with it? Probably. But again, just like how I said in the beginning about like karma and the universe watching, like you may get away with that shit now, but like
it's coming back.
Like 18-wheeler gonna find you at an intersection.
Like you're gonna get fucking smashed, and you're gonna wonder what it is. And it was that one time when you did the thing you weren't supposed to do. So so I'm not advocating.
I'll try not to.
I'm not advocating for that at all.
That happens a lot. Everybody asks me how I spell my name. Well, I guess it's good to keep the contact information completely updated. And so that way, if there's any disputes that you need to make, it's easier on the company or the individual themselves to get it straightened out. Because
also, how this actually happens, when you fill out that credit application, you could have everything correct. But a human, which we fuck things up all the time, is fat fingering something, and entering in your information to apply for the application. So that's actually the most common way that it happens. Like you apply at the car dealership for a loan, and you submit your application. Well, they start typing it in, and they're managing 5 other deals and doing all this other stuff at the same time. They put something in incorrect. Well, that's what's getting reported, because to register that inquiry, however you say it, what's being registered, how that process happens is who's entering in the data. So if that F&I guy is typing in for your application and they approve it and whatever, and he misspelled the name, well, now, hey, he typed it in. Here's the app where I did it the right way. That's not me. Right? And you need to correct this information. This is the proper way how to spell my name. This is my correct address. So 9 times out of 10, it's not like the consumer that does it. It's typically the person in the middle that's collecting the app to report the inquiry. Where they could just fat finger something by accident. And now it's your fault.
It's the whole computers are only smart as we put the input into them. They're dumb unless we type information and data.
It's always user error.
No, that makes perfect sense. So I'm trying to think of what else. I had a conversation with somebody the other day, and they were asking me something, but I always lose it.
I do too.
That's why I had to bring my wife.
Want to know my tip? Text it to you. Like I always, like this morning, I woke up at like 5 o'clock this morning.
Big on that,
So I woke up at 5 o'clock this morning. I had to remember to do something. So I was like, I can't risk not remembering it when my day gets gone. So I rolled over, got my phone, texted me my little message.
That's smart.
So my wife and I just started using this app called Todoist.
It's
kind of like a to-do list type deal, but it's really good because links across all your devices, and
it's called Two Dudes.
To-do list.
Todoist.
Two Dudes.
He's going back to the Pornhub days. Get your mind out of the gutter. So it's
lonely there.
It's really cool because what she can do is she can, on the backside, if I'm having a meeting or talking with David, she can be like typing in like reminders and tasks for me to like check off. Yeah. I'm a nuts and bolts, like do this, do that type of guy. You tell me what to do, I'm gonna get it done.
Yep.
I might procrastinate a little bit.
Yeah.
Hey.
Yep.
But if it's serious,
A little.
I just need to know like the time frame when I'm measuring your
perspective. Yes, when I'm measuring. Wait, what?
Yeah. Like a little nub. Anyway, so so this is kind of like really good for me, but that makes a lot of sense.
I mean, there's a lot of common questions like that.
Yeah,
know?
I like it. And I like the information that you're putting out because it's important. And I think if you were to like put it all into like one wrapped package, you know, you're basically starting with client's information. If they've got incorrect errors or whatever on their report, and they have a really, what do you call a thin profile, which means they have a weak credit history, right?
Right.
And those people, do you feel like it's easier to clean up somebody with a thin profile with a low score than it is to somebody that's had a long history?
Yes.
And they got a lot of derogatory stuff?
Yes.
Because
it winds up being a lot easier because, again, and go back to episode 1, or technically it's 50, right? Was the episode we were on. But go to our
Part
first
1,
episode is what I meant to say, where I really break down the mechanics, because if you can understand the mechanics, the 5 factors that influence it, every question you're ever going to have in your entire existence about credit will be answered through that. So the thin profile is easy because we're not fixing, essentially. There may be a couple little things, medical debt, little shit like that.
Yeah.
But what we're doing more of is we're building.
Yeah.
Right? So again, using the gym analogy, if you're looking at yourself and you realize like, man, like, you know, I don't know, my biceps seem small, or, you know, my traps, I want to get my traps big. What do? You focus on your traps, right? And you start doing everything tailored to that to get them to grow.
Yeah.
So if you have a thin profile, that means it's lacking payment history. So you need to find ways to report as much payment history as possible.
Gotcha.
Now, a nice little hack that I'll give is when it comes to building payment history, there's a lot of great ways to do it. So there's something that's going around right now, and I've been having this conversation probably over the past 30 to 45 days, where I think half of the real estate agents that we're either partnered with or that like follow me on Facebook started like defriending me because of this. But it's fine because it's the truth. So
sometimes you just got to spit it out, man.
So
pull the Band-Aid.
Yeah.
So like what happens is I'm tired of seeing people in real estate that keep telling consumers that you're bad and you're stupid for renting, right? So, and their solution is buy a home.
Yeah.
I'm not disagreeing that building your net worth and all those things and having equity and all of that, and I don't disagree with any of those things.
Right.
But if there is one real estate agent in existence that can show me that they were preaching that message as consistent as they are today prior to being in real estate, I'll be shocked. Right? Because the only reason we're telling them that is because it aligns with a paycheck that you get. Right? Absolutely. So before you were compensated based on how many people are homeowners, were you preaching that same message? Right? So I want to offer a different solution, especially to people that are renting, to tell them there are actually many benefits of renting. Now, buying a home is absolutely amazing, and you should definitely 100% do it. But trust me, if everybody had the credit and the income and the assets that lined up to make them a homeowner, don't you think they would have fucking did it already?
Yeah.
Like they know.
Yeah.
They know. Every time they log into Facebook or they go on Instagram, they go on TikTok, there's somebody telling them that they're stupid for renting and they need to buy a home.
Yeah.
Trust me, they know. The message that should be happening is let's find a solution to help the people that aren't in the position to do so, because everybody wants to buy a home.
Yeah.
Right? Maybe there's a 1% of maybe people that are a lot older and they're like, well, I don't want to be responsible for fixing shit, so I'd rather rent. But besides the exceptions to the rules, majority of people want to own a home. Mm-hmm. So instead of telling them they're stupid, let's offer a solution. For example, if somebody has and they don't have to have a thin profile, but this typically helps the people with the thin profile the most, is most people don't know you could report your rent.
Yeah.
Right.
So we were talking about that today. Yep.
So there's a company that
it's called Rental Karma.
Rental Karma.
There's another one too.
I like Rent Reporters. But
I saw that one today.
There's a couple different ones. Rent Reporters, Rental Karma. They're two good websites that people could go use because it reports on 2 out of the 3 bureaus. It'll backdate up to 2 years worth of rent.
Yep.
It reports in about 3 to 7 business days, right? So you're not even waiting a 30-day cycle. And now what happens is they're going to take whatever that amount is per month, and they're going to backdate it to however many days, and whatever the math winds up being, they report that installment loan there, right? So now it's showing let's see, what's easy math? Let's say renting 10 months and it's $2,000 a month. So it's 20 grand, right? They'll report that $20,000 and then backdate all of the on-time payments that you've made against it. And then every month that you keep it active, they're reporting another on-time payment every single month. So while that's hugely beneficial, is because the number one influence to your score going up or down is payment history.
Right.
So if you can report that, it actually has 2 things. One, if you report that, you're going to put 2 years of payment history on in about 3 to 7 business days, instead of waiting 2 years to build 2 years of on-time payment history.
Right.
It accelerates the process. Part number 2 that it dramatically helps with, Fannie Mae has now recognized, and they put it in their guidelines, where they are recognizing rent payments, even if it's not being reported. They'll look at it up to a year, but if you use one of the rental reporting companies, they'll do it 2 years, and when it's on the report, they have to recognize it. But what the good thing is, how many times do you see a post of people saying, hey, you can, how can I get approved for an $1,800 a month rent payment, but I can't get approved for $1,000 a month mortgage? Yeah. Well, now what's also happening is if you can show that in the last 2 years you've been paying $1,800 a month on rent and you've never missed a payment, that is now going to be considered as a reported, proven factor that if you can manage that much, you'd actually be saving $800 a month by getting approved for this $1,000 mortgage. So it helps the consumer in both ways. It helps them with the lending decision and actually increasing their score.
Yeah, I think that's an important thing to note is a lot of times you can buy a home much cheaper than you renting.
Absolutely.
Rent is typically a lot higher than what your mortgage payment would be, depending on the taxes and all that stuff.
Right.
So, I think David and I have talked in the past about the importance of home ownership, but we run a property management company. If people didn't rent, we wouldn't have a lot of income, most of our revenue coming in from that. So I think that you're right. I think a lot of agents poo-poo on the fact that people are renting and throwing their money away, and which there's a little bit of truth to the throwing the money away thing. But like you said too, there's some people. We've got a tenant right now. He pays $2,400 a month in rent, and he don't want to buy a house.
Yeah,
he travels so much. He don't care. He just wants to rent, and he don't want to mess with it. He don't want the maintenance and the lawn care and all that stuff. So
HOA fees, school taxes. There's a lot that comes with it.
You get feed to death.
Right.
And he didn't want a part of it.
Either way is okay.
Yeah.
Right? If you're renting, that is perfectly okay because you have the flexibility and all those things.
Yeah.
So I don't see anything wrong with it.
No, not at all.
But I also understand the benefits of home ownership that, you can have these fees and taxes here and whatever. But at the same time,
build equity.
You build equity, and you can then use that if you want to start getting into rental properties and blah, blah, blah. There's so many different things you could do with that. And I understand all the benefits. But I guess my overall message is for everybody who's renting, which is majority of people, let's not shit on those people for renting, because trust me, I'm sure they want to become a homeowner. So let's become a part of the solution rather than just telling them hey, you're making a bad decision. Just like when I was selling cars, I was at a Subaru dealership. So when people would come in and they want to trade in their Camry or their Corolla, I'm not saying, oh, look at that piece of shit. And some people do that
About
as a method.
time you came to your senses.
Right? Told you their all-wheel drive sucks. Subaru is the only one with don't bash people for the decision that they made, because you have no idea, what their situation was that led them to that. And maybe they love that car.
Yeah.
And so I was taught by one of my managers back then to say like, hey, what is it that you love so much about the car? Because I want to make sure I can give you those same things in this one. Yep. And let me just tell you some of the benefits of this. I'm sure you read up on it, and encourage them about their decision, and don't shit on them for the position that they're in.
And I kind of went through that same thing with a current rental tenant that we manage right now, and they're wanting to buy a home. I'm actually showing them houses now.
Nice.
And I did the same thing. I was like, hey, you've been in this property for over a year. Tell me what you like about this one. Mm-hmm. Would you buy the next home? Would you want some of these features in the next home?
Right.
I mean, what do you like about it? What do you not like about it? Because when you go to purchase a property, you sometimes have the ability, if you're doing a new build, to move some things around and select certain things that you really like.
Right.
So, yeah, that's a good point. And I appreciate you coming up and saying that, because I think you're 100% on point with the whole fact that a majority of the industry is out there sharking people to just get the next closing. Yeah.
Just like majority of people in my industry wind up, saying guaranteed and it's going to work really fast. Like that's what creates the stigma in all of the industries, right? And so, for example, my goal is to eliminate, and that's a big fucking task. Yeah. But to eliminate the negative stigma, the ugly stigma that is attached to credit repair. Yeah. Right? So, and again, if you're one of those people, that are saying it like, it's fine, we all screw up, just change it. Right? That's all I'm saying is like, do better and do more for the people that are confiding in you to be that subject matter expert, that's going to walk them through their first purchase of a home. Or, if you're even another credit repair company, because I know there's people that stalk me too. If you're another credit repair business owner, I'm not saying I want to be the only one in the industry. I actually rather lock arms with people that are of the same caliber and same mindset, which we all got into this of helping people. Right. But if you're going to put yourself before helping other people and trying to mislead them and misguide them, like, get the fuck out.
Yeah, it's like, an ethical, don't step across the ethical guidelines.
Because
like,
now what happens when I meet people, and they're like, oh, hey, what's going on, blah, blah. Yeah, man, so what do you do? And I'm like, oh, I have a credit repair. Instantly, there goes, oh, fuck this. Right? Like, oh, here we go.
It's
right?
got like the hidden box.
And like, that's what I'm trying to change. Yeah. Right. So, and that's why I sunk my teeth in so deep to the real estate industry, because there's so many people who want to buy homes. So if I could align with people that are of the same morals and ethics and values, which is helping other people and going all the way through it, even if there's sometimes not a direct benefit for you in it, those are the people that I like to associate with, because now you're doing the right thing.
Yeah. Yeah, and I think you're doing a massive job with like, your outreach program that you're doing, because I see, like I said in the first episode, that part one that we did was like, every time I turn around on Facebook, you're at a different event, networking with other agents, trying to spread the message of like having good credit and how important it is. It's not just important for buying a home. Right. This is going to like be generational for you if you can learn it, have great credit, be able to do investing and do whatever you want to do and have a great lifestyle. Because honestly, having good credit opens up a lot of doors, not just buying a home. It opens up a lot of stuff. A lot of insurance companies, they give you shitty rates because guess what? Your credit. Because they're like, this guy's very risky. I don't want to, I'm not going to, is he even going to pay? Right. So, your credit score is going to be a massive impact on your daily life moving forward. And if you can become very proficient and have a good credit score and have a good lifestyle, you can teach your children to do the same thing and them theirs. So it's like, it can create generational wealth just off of credit.
Absolutely. Like I say it all the time. Someone with a 450 score and a 750 score live two completely different lifestyles. For sure. So I take it upon myself to put it on my shoulders to say it is our company's moral obligation to make sure that we could take as many people from that side and bring them to the other, because people with 750s and 450s, they drive different cars. Yeah. Their kids go to different schools, which let me go a level deep on this to tell you why this matters so much is, okay, if your kid goes to a different school, so what? Well, no, it matters because it depends on their level of education. Right? There's school ratings for a reason. And you want to give your kids, like all parents say, you want to give your kids what you've never had, right? You want to give them more. Absolutely. So you want to put them in the best schools, even if it is a middle school, an elementary school, or a high school, because also what happens, fast forward, is depending on what schools your kids went to in middle school and high school will also influence the decision if you're putting your kid in college. And if they say, oh, they went to that high school, fuck that.
Yeah,
right?
Automatic. Unless you're like a protected class or something.
Right,
like
exactly. So like...
I'm writing down all the nationalizations. I'm checking all the boxes.
Yeah, so like literally... depending on what your score is, you may be able to live in a different part of your neighborhood that allows your kids to go to a better school that sets them up for an overall better lifestyle and opens more doors and gives them more chances. And then you can teach them as they get to that age, here's why you were able to get those things that I did, because here's the steps that I took. Right. I made sure I never messed my credit up, or if I did, this is how I fixed it. This is how you understand credit. Here's the do's and don'ts. And now as parents, we're really pouring into our kids and creating that generational wealth and that overall awareness that we're all looking for and we all talk about and post on Facebook.
Yeah. And I think like in part 3 of this series, I really want to start deep diving into how families and parents can get their kids started out on the right foot with good credit by doing certain things that need to be done.
Absolutely.
And so we can definitely get into that in the next one. And, yeah, there's a lot to cover.
Oh yeah,
and I'm glad I picked you to come in and thank you for coming and like
absolutely
just like doing the show, because I think this is one of, if not the most important aspect of being an adult, and it literally, like I said, it can change your life
100%,
and like you said, it can change your family's life.
Yeah,
it's going to determine where you're at.
Yeah, and everybody around you.
Yeah, and so I just really. I'm excited to do the next one because I think the next one is going to be like a little bit of a culmination of all the things. And then so that way we can really do a deep dive on foundational steps and what your company offers too. So if you guys are still tuned in and you've listened this far, make sure that you subscribe to the show, because part 3 of this episode or this series is going to be like a culmination and like a how-to to get you started and how to get in contact with James Warren Group and how all that works. We'll even go into a little bit of information for all the real estate agents that are listening on what their referral program is like and what their networking and membership program is like, because I think that's probably something that for real estate companies, it's a massive benefit for your clients. And I'm not going to talk any more about it because we'll talk about it next time. Yeah. But I just got to give you guys a little crumb so you can come back. But I appreciate everyone tuning in. Dylan, will you hit them really quick with your socials so that they'll know where to reach you at?
Yeah. So you could just search my name, Dylan Shivley. It's Dylan. So just search Dylan Shivley. You'll see me pop up. Or you can even just search in James Warren Group, Inc. You could type it in Google. You could type it in Facebook. It'll pop over Facebook, Instagram. I've been really hitting TikTok pretty hard recently. Okay. So for TikTok, it's @YourCreditGuy. So you can follow me on there. I'm always dropping content. I'm always dropping stuff in there just to educate more people about how credit works. TikTok, Instagram, Facebook are like my go-tos. Also for validity reasons or credibility reasons, I tell people you could just go type in, my name into Google. Go search Dylan Shivley in Google and see what pops up. Like, do your research. See all things that are happening and how many people we've been helping and some of the platforms we've been recognized on. Because one of the main things is, our biggest publication was Forbes. We were published in Forbes about 11 months ago. And we may possibly be doing a second interview with them again. Nice. So I don't think there's many people in my space, in my industry that are touching, going to that aspect. Yeah. We're here to help people. So that's where massive. You can find us.
Massive, dude. Appreciate it. Again, I'll see you next time.
Thanks, man.
Yes, sir.
Take care, guys.